Morning, everyone. So yesterday, kind of an ugly day. We had a pop and drop, which I've been warning that we're in a very difficult range here. So I talked yesterday about how this chart has a lot of work to do, and I really wasn't trusting any kind of rally. Sure enough, we rallied up towards this little blue supply zone, and then pulled back quite sharply. Mostly at the end of the day, we kind of hung out above 6,000 for a little bit, and then pulled back. But we can see across the board here, pretty ugly. Energy started to come back. Of course, some safety trades, healthcare, drugs. Novo Nordisk up again this morning. So a little bit of flight to some of those healthcare names. Home builders and real estate kind of hanging in there a little bit. So a little bit of a different day from the day before. Semiconductors hung in there, but we saw a big sell-off in Nvidia at the end of the day. So people a little bit nervous going into the Nvidia print. But I would say that, this is, as I said yesterday, this is a chart that has a lot of damage on it. So I'd be very, very careful. We'll talk about volatility in a minute, which actually is a little bit subdued, as I'm going to show you. But this is a chart where you're going to get a lot of movement back and forth. You're going to get some strong closes that are they're going to get you excited. You're going to get some sudden sell-offs. So it's going to be sort of toying with you, toying with your emotions. We can see that we've got this sort of longer uptrend line here, right? Probably by the time we get there, maybe around 59.75. But as I'm going to show, we've got some decent support in there. From a negative perspective, the mag stocks have not been acting well. Microsoft not acting well in general. Amazon pulling back, very severe negative performance in some of these names. Just can't get going again. This is not the mag of the year and a half up to about August. So we can see QQQ bouncing all the way back here. We can see this 50 on the RSI has been good resistance. That's how I like to kind of use these RSIs. It's not so much as overbought and oversold, but as you can see here, we tend to come down in a strong uptrend. We tend to come down to that 50, a little bit through, a little bit through. Then we blasted through. That was quite negative. And then we hit our head on that 50 going up here. So that's the midline, that mid 50 line. Again, yesterday, this is a 15-minute chart, of course, so we're not looking at a daily. But again, from a short-term perspective, that's a good spot to keep an eye on. I like to look at that. I like to look at the 9 EMA for little spots that we might have a little bit of struggle to get through when we're in a bearish backdrop. So look at this, look at the 9 EMA, good little spots. What I don't like to see is this MACD rolling over here. So we could have just a little bit of negativity. But let's take a look here. This is Bitcoin, of course. This is going to be a little bit of a concern as well as we see liquidity. When things get bad enough out there, eventually people start to sell some things that they've been doing well in. Bitcoin above 90,000 is still pretty good, even though it's down from 100,000. So people, I don't think it gets too bad, but we are below 90,000 for the first time in many months. So difficult spot. You can see our MTI indicator here, which you get with all the programs. Got out of Bitcoin kind of up in the 104 area, enjoyed most of this run here, and then went defensive, and it's pretty much been out for this time. So that's kind of cool to note. And we can see some of the proxy names. Here's MSTR, which has been cut in half, even though Bitcoin's only down maybe 12, 15% from its highs. So these names have got a lot of beta to them, very, very dangerous names. We have a long strangle rather, in this right now, and I'm getting a Vega bailout. So I'm going to do a video on that. Started long deltas, but I knew that if it collapsed, I was definitely leaning more towards the upside, but I knew that if it collapsed, we'd see a big jump up in vol, and it has come back from about a 78 implied vol up to in the mid 90s now. So as it breaks down, even though typically these stocks will have vol jump into upside moves, it just got so low. I tweeted on X. I said, this is just getting super, super low. And somebody replied, strangle? And I said, yeah, it's time. Probably time. So here we are getting a little bit of a bailout on that position. That's called my Vega bailout setup. So what's going on out there? Well, all vol is not the same, right? So we're trying to figure out, is this durable, right? So we see these knee-jerk moves in markets, and we've certainly seen them to just below 6,000 before over the last couple months. And they tend to be knee-jerk, a CPI number, something like that, that tends to be tradable, whereas the overall backdrop is still okay. But the markets are starting to get a little bit concerned about inflation and growth, right? So the little bit of a growth scare working its way into things, because this might be becoming a little bit more of a durable concern. Tariffs, spending cuts in the government, inflation from tariffs, from immigration policies. things like that, that's going to hurt confidence. We already saw consumer confidence down a little bit recently, so we don't really need that. So this is all kind of turning into a bit of a growth scare. And Trump came out and said we're going ahead with these Mexican and Canadian tariffs. So this might have a little bit of durability to it. That's my concern from a sell-off standpoint, that there is a little bit something out there that may not be solved rather quickly. Good link. I'm going to drop this in below. Really nice article on what deregulation looks like under the second Trump administration. Amazing look at the various areas that it's going to affect. Very important for investors to know. So, plus regulatory issues, AI disruption. There's a lot of stuff going on out there, right? This AI stuff, this quantum stuff is really kind of starts to make you wonder about where can the disruption happen. A lot of positives, right? AI is um, going to be very kind of going to lead to higher productivity, probably deflationary to a large extent, but we don't know what companies, what sectors is it going to affect in a negative way. So markets don't like uncertainty, so that just introduces a little bit of negative to the positives that come with that. And this idea that Trump loves the market, this sort of Trump put, is a little bit uncertain now because he's sort of a bit of a bull in a china shop right now. And I kind of understand it. He wants to kind of front load some of the pain so that maybe later on in a year or two, things start to look good again. And he looks fantastic. I think a lot of what he's doing is actually very interesting. It could be very positive. But in the meantime, you kind of have to break a few eggs to make this omelet. And I think that's kind of what they're saying. And if you don't have that Trump put in there that everybody kind of figured maybe was there because he loves the market and he's going to do all these great things, then you've got a little bit of a concern for us, at least in the short and medium term. So, yeah, and I think where that affects markets is I do think at some point we're going to have light at the end of the tunnel. Markets tend to look into the future and they look for that positive impact, which I think will come. But we've had record profit margins the last couple of years. If we do get a bit of a slowdown, if we do get a bit of an employment issue and a confidence issue, that's going to hurt the consumer. The consumer is what, 70% of the economy. That could hurt these really high record profit margins that we've seen that have really persisted, even as interest rates have come up. Record profit margins just persisting. That's been really, really kind of bulletproof for a little while. Okay, let's take a quick look at volatility. So this is kind of interesting. We're seeing that the VIX up to this point is really a reflection of riding down the curve. So what do we mean by that? Well, when the market comes down, it starts to get to strikes that have higher implied volatilities, right? So the VIX calculation, which is very complicated, starts to reflect just quite simply, nobody's necessarily rushing into protection. The VIX will go up just by virtue of the market coming down and riding down that IV curve, that IV slope, and that's going to get reflected in a higher VIX. Doesn't mean necessarily that people are panicking. So a lot of people really don't realize that about the VIX. So you can kind of see that fixed strike vol hasn't really gone up. And so what that means is when you see fixed strike vol, so if a 5,800 put actually rises in implied volatility, then that's a jump in fixed strike vol. But if it just kind of sits there at a certain volatility, at a certain implied volatility, and the market moves into that strike, then the VIX is going to rise, but not because anybody's kind of panicking and buying it. So right as of now, it's been somewhat orderly, which is a good sign. And I don't think it's that surprising because we've seen some drops into the 5900s, and the market has dealt with that fairly well of late. Again, question, is this a durable move? So far in the VIX market, things aren't getting too panicky, even though the VIX has gone up. So now, part of the reason for that is dealers are still fairly okay, right? Down to 5,800, they're okay. They're not getting longer on the way down. So when we talk about gamma exposure, the concern is when we move down, dealers start to get longer deltas, either by being short puts, other positions that they have, and they need to chase and sell deltas into increasing long deltas in their positions. That's not happening right now. Now, if we get below 5,800, then all bets are off. This could get really, really ugly. So again, this is one of those scenarios where probably okay around 6,000. We're kind of positive. We're really positive. A little bit higher there from a delta exposure, gamma exposure. But in here, we're still okay, and that's probably why the VIX hasn't panicked too much. Having said that, we've seen those vols jump up. People are nervous into Nvidia, nervous into GDP numbers and inflation PCE coming out. So hopefully that gives you guys a little bit of a backdrop. Not super, super nervous, but without question, we have some damage on the charts. This is going to be a bit of a trader's market right now, and a market where you're getting higher implied vols. We're looking at certain cash secured puts. We're doing some interesting things. We've been adding to our VIX positions, our upside VIX positions. So we added a little bit more. We had some, added a little bit more over the last couple of days. So we're not just sitting there and taking it like a mule tied up in a hailstorm. We're kind of getting in there and stick handling a little bit. Probably going to look at doing some callers. We got a little bit of a bounce today, and try to stay on our toes. Okay. So have a good day, everybody, and we'll see you in the next video.